Alright, test. You hear me? You see my screen?
Yeah, man.
BTCUSD and XAUUSD,
Mm-hmm.
yeah. So Bitcoin longs executed from around the 77k zone now. I'm going to clean up the chart a little bit just for simplicity purposes. But what we can see is we had this imbalance here, okay, formed on Wednesday pre-London session. This was our first volume surge to the upside, where we first pushed the upside and kind of changed our character for the week, right?
Yeah.
We left this imbalance throughout most of London, and then in the Wednesday New York session, 3 p.m. London time, we came and we tested into that imbalance. This was the first long that you could have taken for the week, right? So the first long opportunity was obviously a fill of these single prints. Yeah. After
Yeah.
we filled these single prints here, I've just drawn on, we pushed the upside and we had 1, 2, 3 drives into this zone. So this was your obvious exit as well. Not only is
Yeah.
that 3 drive sweep of liquidity, if we go back here, we'll see this is in conjunction with the Sunday Open imbalance, right?
Yeah.
So look, 11 p.m. London time on a Sunday. That's where we've tested into 3 times. This was a very clear-cut trade, just imbalance, rotation. You understood the candle dynamics of this one was large wicks to the downside, demand for buys. You understood the candle dynamics for this were wicks to the upside, curvature, demand for sells, easy rotation. Furthering that, if I get this one off, you'll see we push back down in today's London session. London kind of had a bearish character until we came to the New York Open, 2:30 p.m., which is when I've taken the trade. At 2:30 p.m., what we did is we swept the previous day New York lows. Right, so the 76,850 that we've got marked out here got taken out. We had 1, 2 candles. Both these candles, big wicks to the downside, both of them instantly bought back up and we reclaimed. So when we took out and swept this low, we instantly reclaimed, we had demand for buys, and all we actually did is kind of fully fill out these single prints. Does that make sense? We didn't ever close beneath the imbalance zone. We just rebalanced fully and then reversed.
Yeah.
So what's important here is how you can manage the trade in a more efficient manner. You should pay attention to the candle dynamics. These 2 candles, the 2:30 p.m. and 3 p.m., these have big wicks to the downside. Okay, these wicks both close way back above, firstly the New York low, and secondly the midpoint of our imbalance. The next 2 candles, both wicks right into this low being respected and being protected by buyers. And if we come back to put in the moving average cluster on, you'll see as soon as we start actually getting above the moving averages, as you see in here, that's when we have this skyrocket. Okay, so as soon as buyers actually were able to defend this zone through the wicks of the downside, again the same rinse and repeat candle dynamics, then that's when, once they defended the zone, sellers capitulated and we had this one big candle just essentially where there was no more selling pressure to be able to suppress the price further. It all plays out in one candle. Candle being this violent obviously leads to a lot of profit taking, leads to all sorts of stuff which is going to cause that obvious pullback. What's important to note for a bullish structure to be maintained is this pullback has all it's done is actually fill the imbalances that the candle had left. Does that make sense?
Yeah.
So since we've respected this imbalance here, and so long as we do so, like let's say 77,250 at an absolute lowest, then you should anticipate the continuation. Firstly, you got triple equal highs, liquidity rests above them, they should be getting taken out. Above those triple equals, we also have this imbalance here, the 78,600. If we were to start trading above these triple equal highs, you can see a fast cascade into this zone here, which is essentially what I'm going to be playing for at this point.
Yeah.
What's also important to mention is if we go above 78,600, we have air in the market up until 79,500 to 80k. Like all of this zone here is after we get above this, the next area is literally here, because all of this is bullshit. You understand? Like this is nothing. So the next area where we would need to rebalance would be up near 80k. So if we were to My point is, this is a trade that you could easily compound. At this point, my worst case scenario is going to be a break even. My best case scenario is I can compound the trade into 78,200, 78,600 and 80k eventually, you know?
Yeah,
Which is why it's like a nice setup.
a little catch the trend.
Yeah. Speaking of catching the trend, you understand that on Bitcoin, right?
Yeah.
Speaking of catching the trend, we'll talk about gold, because we had the double longs this week. Like, the first one was somewhere, I think it was around this zone here, the first long that we had taken.
Yeah.
And we got out of it, majority of it around here. We did have an extended TP into this zone, but for the purpose of this, I'm just going to draw like so. So we had double longs this week on gold. Firstly, had this one on the Wednesday, and then had this one today. Right, this one, both really nice, both played out to a T. If you kind of want to break down what is going on here on gold, the first long is the easiest long. Okay, what you're going to see is we've got the Tuesday New York low. We trade above it all across the Asian session on Wednesday. When we're trading beneath it, what do we have? Wicks to the downside, the curvature, that U shape, that accumulative price action. We get back above. You see this candle here where we've wicked down and then come back up. This is where buyers have effectively defended this zone, so that's why we have the continuation. What we also see though is on the 3 p.m, I believe this is on liquidity driven news event, we have this test into our entry here. What I want you to know is, if we plot out this low here, which is Monday's low, look how this structure looks from that sense. So we trade into Monday's low, wick back above it, we trade into Monday's low, support, we get below when on Monday's low, capitulation, hard break, we get back above it, and all this wick here is essentially a retest, right, of Monday's low. So since Monday's low has been traded with and interacted with so cleanly, one test here, support, breakthrough, resistance, a reclaim, support. Since Monday's low was traded that cleanly, I'm looking to essentially play Monday's range, which gave me that further bias to look for this 45.90 zone, right? These highs up here. So all you'll be playing is a Monday's range trade, and I just decided for my own like optimization purposes to break this up into two trades. Instead of playing this to this, like so, I've just broke it down into two separate parts, and this is, obviously it's a lot easier to manipulate your risk when you're taking the trades from multiple entries and capturing profits here, taking other trades, you know what I mean? It's a lot easier to manipulate your risk, and you're not so like directionally forced in one way. In terms of because that we just spoke about that previous trade for gold. In terms of the next trade, what I saw for these longs is obviously the accumulative structure. We had the U shape forming with the wicks into the downside. Obviously all of this being validated by the flow. In the order flow we're seeing, in this case we're seeing sellers getting trapped, right? We're seeing that on the flow, we're seeing sellers getting trapped down at the lows, which means once we push the price to the upside, sellers have to close, which causes these cascades, right? So the flow told us that while we're having this accumulative price action or price structure, we're also accumulating heavy sells to the downside, and trapping heavy sells to the downside, which is important because they eventually capitulate like they did. This price action took place in the single prints that were formed in yesterday's New York session. These single prints prior to New York, right? These single prints were like kind of operating as the London highs, so it's also got like a structurally sound idea to it. Does that make sense? It's not just a single print. Directly prior to the single print in the previous session, we also saw this operate as like the local high, so structurally is also significant to us. And so once we maintained and held this area, you see I saw this wick to the downside, I essentially entered on the momentum of that wick. And the next three candles, like I said on Bitcoin, were really important, especially in my management. These candles show wicks to the downside. They're showing that we're respecting this zone, that buyers are defending this zone, and kind of as I mentioned before, as soon as we got above these moving averages and we got above like the kind of local highs, if you will, what you see is this capitulation where all the heavy sellers down here who got trapped, they're forced to close their trades, their stop losses are forcefully hit, which caused us to cascade straight through to the next level of importance. Yeah.
Mhm.
Where we stand on this now is we took heavy profits again on 45.50. I think the exit we got is anywhere between 45.50 and 45.60. Like we kind of scaled out between this zone, right?
Yeah.
Like kind of say the top end of this imbalance, but we still have, roughly speaking, 40% of the position remained open. Stops,
Yeah.
of course, at break even. And the thesis moving forward is simple. Like we have imbalance in price here, midpoint of which has been perfectly respected. The moving averages have been respected. What I would like to see is essentially this is the area that I want to call like the last support, if you know what I mean. If we go back below
Yeah.
45.30 and we can't reclaim it, like we're going to have to be exiting the trade anywhere around here, and which is fine
Okay.
because we've already banked nice profits up at this zone, right?
Yeah.
That's kind of like a big tip that I would give for a rotation trader. Like the way I'm operating, you know, I'm trying to be anywhere between 1 and 4 sessions on a trade, let's say. It's so important to pay yourself every day, right? You need to
Yeah.
figure out a number that's important to you, but like a minimum amount. What's the minimum amount you can earn per day? I don't know. If you live in fucking England, £100. You live in London, £200. You live in, you know what I mean?
I've just sent you an apartment for £400 a month in Thailand.
Whatever it is, you need to have that daily. What's like a daily? I'm happy with this amount. You know what I mean? And paying yourself every day in these trades is like what I would say is a game
5
changer.
bills. Need 5 bills every day.
Yeah. But yeah, gold essentially, if we respect the 45.30, I think we continue up. And then the levels of interest are obvious. 45.90 is the ultimate level we want. 45.70 operates as the Thursday Asia highs, and 45.60 operates as the Thursday New York highs. So any of these 3 levels here, we can just look for a sweep. If we sweep this and then go back down, then we can just go and close here. If we sweep this one and go back down, but like I said, I do have that preference from a structural basis. For Monday's high to be revisited, the 45.90s to be revisited.
Yeah.
Super fucking clean shit on gold, man. Back to back, mega longs.
Then it gets back above, deviates that high, comes back down.
Cross that bridge when it gets there. But so the gold and Bitcoin, you see from both the trades. The reason why you're seeing me, why I'm trading them over most pairs, especially Bitcoin, but gold too, in more recent months and years, is the asymmetry of it. Like, very few pairs are just going to provide the volatility required to catch these type of moves, in my opinion. Especially, like I say, as a rotation trader. You know, you might be able to catch like a nice swing on whatever your fucking pair is, or a nice swing in forex, or a nice scalp in futures. But I feel like Bitcoin, to an extent gold, is where there's just enough asymmetry intraday, intra-week, intra-month for you to take trades on all 3 levels.
That was a lot to take in, that was.
Stop recording.